What is going on, everyone? Today was a great day in the stock market. New all-time highs were made, individual stocks are bursting, and the Fed is going to start cutting interest rates in 6 days from now. This is making for some great moves and opportunities heading into tomorrow, so stick with us today as we're going to cover all of that and more. Let's get to it. So the market crushed it today. We can see SPY made new all-time highs of $658.33. Individual stocks like Tesla, Opendoor, and ticker symbol CNC all had great days, and honestly, a bunch of other stocks crushed it too. There was a lot of money made all around, and basically the biggest reason that caused this was because today's inflation data came in a lot better than feared. We are in a situation right now where the jobs market is deteriorating, and we all know that the Federal Reserve is going to turn on the money printer soon and start cutting interest rates. The only thing that's really standing in the way of that is if inflation is too much out of control. But today's data showed that the inflation rate came in right at expectations all around, which basically gave the Fed permission to cut interest rates as expected. For a while, there was more and more talk of a potential double rate cut at next week's Fed meeting, which is on September 17th. But because today's inflation data came in right around expectations, that kind of solidified the chance of us just getting a single 25 basis point rate cut. This is good because it's going to start to stimulate the economy and the stock market, which is something that is certainly needed. And basically, this is having a stimulative effect not only on stock prices as we saw today, but it's also starting to spur other aspects of the economy in a good way. We can see that basically mortgage rates are already starting to tank off, which is definitely a great sign, and rate cuts are doing exactly what they are expected to do. And again, these rate cuts are starting to go into effect in 6 days from now. But as we know, it's not all sunshine and rainbows. There are still some real risks that we have in the stock market and the economy right now. Yes, it's great that the stock market's still at all-time highs, but we still do kind of have an inflation problem among other things. There still is the possibility of a recession, as we all know, like we covered last week. Basically, we are seeing some key recession signals flashing red, like how U.S. construction spending is falling off a cliff. It recently had one of its biggest drops since the 2008 financial crisis, and whenever this data point fell in the past, it always coincided with a recession. As we can see in the chart right now, whenever we see big drops on the blue metric, we can see that it always coincides with what we see in the background, those gray areas. Like we could see the most recent one in 2008 was very significant. Of course, COVID was kind of like a unique situation, but we could see that this pattern has persisted for 50 years over that, and it makes sense. When we look at the stock market right now, we can see that it's at all-time highs. So basically, investors clearly don't seem to care that much about the risks that are out there, which is fine. Number one, the stock market isn't always rational, and there are still, a good amount of bullish, things going on in the economy as well. If you are someone who is skeptical of the market right now, that's totally fine. But you just have to make sure to position yourself so you don't get ran over in the meantime along this bullish craze. As we look at SPY right now, it made new all-time highs. Really, the only major resistance level we have overhead is the all-time high today, around $658.33. We do have like a psychological level closer to that 660 mark, but again, there is no official resistance level there. Looking at the downside, we do have some key supports at 654.80 and 652.20. Keep those close on mind, but basically the market is, running free and clear right now, and we are in a situation where I am personally looking at the market where it's hard to fight against this bull trend until price confirms it, or until we have some meaningful changes changes in information. The market has been in a very strong bull trend, and again, until we have sufficient evidence or proof, it's hard to bet against that, especially in the short term. Some things that I will point out, though, is that when we do look at some historical data, we can see that next week normally is pretty weak. Basically, next week is what's called a triple witching week. Essentially, what this means is it is when stock options, stock index futures, and stock index options all expire on the same day. This will be September 19th, so that'll be next Friday, and I want to show everyone this ahead of time so you can prepare for it going into next week and position yourself however you want to on the last trading day of this week, which is tomorrow, of course. But anyways, as we can see, whenever we have had, September triple witching weeks in the past, over the past 25 years, they have been red 72% of the time, as we can see in this bottom right corner. It's green only 28% of the time, and I think this is especially meaningful given how bullish leaning historical stock market data is, because as we know, the stock market rises a lot more than it falls. We could also see the average returns are also negative. This doesn't mean next week has to be red, but again, I wanted to point this out to everyone ahead of time so you can position yourself however you choose to. Some other things to certainly keep on the radar is that tomorrow we're basically all clear. Of course, we had that important inflation data reading today, which certainly helped boost the market. We do have some Michigan consumer sentiment data 30 minutes after open tomorrow. Honestly, this data normally doesn't move the market too much, so I wouldn't worry about it, but I would, I would pay attention, especially 30 minutes after open, because, if it comes in significantly outside expectations, it certainly can bring in some big movement. Besides that, we do, of course, have the earnings calendar. Nothing is on the lineup for tomorrow. We did have Adobe report in after hours today. Looking at its stock, we can see it popped nicely in after hours. Of course, it's nothing compared to the mega earnings Oracle God candle we saw the other day, but still not bad. But there were a lot of stocks that did especially well today. Our beloved ticker symbol CNC crushed it as it popped up by 9%. I know a bunch of people did very well with this one, which was very nice to see. I know we've covered it quite a bit over the past two videos, which was nice. And then don't forget, there were also two big money trades on this one as well. So CNC crushed it. It's great to see. Basically, they reaffirmed their 2025 earnings guidance above expectations. Looking at CNC now, there are still two big money trades on this one. In a shorter term sense, I think it's harder to justify just getting in now if you haven't gotten in already. But if you're someone who might be open to, trading the broader recovery at hand, like the $58 million big money trader is doing with their January 2027 25 strike call options, then you might still have some good entry opportunities. But again, you have to have a longer time horizon to be able to justify that. So keep that in mind, but it was great to see this pop today. But even Tesla had some really great action as it popped up by 6%. We can see it's actually a pretty big deal when you look at Tesla's chart, because it is retesting its previous resistance level right around 369 from earlier this year, which, is definitely big for Tesla, because while a lot of other stocks just had, great years so far, Tesla has definitely been, lagging and, not performing as well. They did have some news today where they officially received approval from the Nevada DMV to start testing autonomous vehicles like their robo-taxis on public roads, which is nice. And also, just the general market optimism definitely helped their run up as well. When looking at Tesla for tomorrow, the key level to watch is this 369 level. If they can get past this resistance in a meaningful way and put consistent pressure on its intraday highs, just like it did today, it can definitely continue this, cycle of, buying and, just this bullish craze that we're seeing. If Tesla rejects like it has for a lot of this year, then it's going to be harder to justify playing. As we all know, Tesla is one of those stocks that when it has momentum, it offers great opportunities. And it's also one of those stocks where, when it's running, it's pretty common to see it run for multiple days after the fact. Today I would say it's like day one. We have to see if it can continue to keep up this momentum tomorrow will definitely be a good test, so keep it on the radar. And another stock that is hard not to cover today is Opendoor, ticker symbol OPEN. This stock went insane today. They closed up by 78%, where basically they named a new CEO, which is big for them, and Opendoor is one of those stocks that has definitely had a rough past couple of years, but they're starting to get their mojo back, you can say. Ever since July, this stock went from 55 cents all the way up to, as of today, $10.70, which is crazy. It's also one of those stocks that is like higher risk, higher reward. They are dealing with a lot of, recovery as a company right now, as they are certainly far away from their all-time highs of around like $40 that they set back in 2021. At this point, unless you're scalping, it's hard to justify it, like getting in, because it's just up so much. But again, if you are like an ultra short-term trader and you have no problem getting in and out like quickly, then this stock is moving in an asymmetric way. It has news, it has crazy momentum, and it is just squeezing like crazy. The more pressure puts on highs, the more other people are going to buy in, the more shorts are going to get squeezed out, and the more euphoric the environment will become, which is great. But it's important, especially with a stock as volatile as this one, where when the tide starts to turn, you cannot bag hold, because you'll definitely get ran over pretty badly. And another thing too is when the tide eventually does turn, it can make for some really great short opportunities. So it's a stock that's in play. Keep it on the radar. There's news with it as well. And besides that, let's get right into some setups and predictions. And my first one is ticker symbol AFRM. We talked about this one in yesterday's video, and we definitely nailed it. Today it fell by around 4%, which is beautiful. Like yesterday, we mentioned that this price action is pretty nasty in the short term. We can see that over the past few weeks, it is making lower highs. Yesterday was brutal for it, just horrible price action, and the same thing continued today. We are seeing sellers get more and more aggressive, not only based on how much the stock is down. A 4% move is certainly respectable, but also the way in which it's moving. We can see that the drops it is having are, very defined. Like it's not really popping up by much at all. If we were seeing a situation where the stock was down 4%, but it was like, having wild swings up and down, it would show that, the supply and demand dynamic isn't so one-sided. But when you just have like a flush all day long on two back-to-back days, it shows that there is some serious selling pressure happening right now. And it's also happening in a time where Klarna just IPO'd, and, it had the potential to be really big for, this industry, but it had the opposite effect. So, there is momentum here. There is a catalyst, and it's a stock that is, in my opinion, still worth keeping on the radar. On top of that, Affirm's Bookmap is pretty nasty as well. We can see that there are a lot of sellers stacked up overhead, and quite literally like zero buyers, just like we showcased yesterday. So keep Affirm on the radar. I'm looking at it in a downside sense. If this flush continues over the coming weeks, I think in the best case, we can see a breakdown down to 60, somewhat similar to the breakdown we saw earlier this year, where the stock fell from like $81 a share all the way down to 32. In the worst case scenario, where the breakdown is much weaker, I can see it getting closer to that $80 mark. But either way, keep it close on watch. So far, so good. Another ticker that is definitely on the radar is ticker symbol PDD. This one is a little bit more of like a higher risk, higher reward trade. It doesn't have as much momentum, as it's only up by around 0.83% today, which, isn't that much. But we did see a recent $10.2 million big money trade with this one on the 121 strike calls for October 3rd. Looking at PDD, it is a Chinese stock, and it has been doing well over the past few months. Other Chinese stocks like BABA are just crushing it, and it's great to see, but it is a little bit concerning to see PDD is, not sharing in any of those at least recent gains. What's nice though is that, when you have Chinese stocks running, it definitely helps support, the bull thesis, but we just need to see the price confirmation here with PDD specifically. Again, it certainly helps that there's a big money trade, but we need to start to see the price actually perform in that way. PDD is definitely on my bullish radar. The more pressure it puts on recent highs, the better the setup will become. PDD, because of the price action, is one of those situations where, looking at it in a bullish sense right now, it's hard to give it that much wiggle room because it hasn't earned it. If PDD falls below like that 124.65 area, I can see that as a justifiable place to cut, wherein if it does turn around and start performing, Chinese stocks definitely do have that like parabolic potential to them, just like BABA is having now. And in that case, I would not be surprised to see PDD get back above that recent resistance around 133 and even push closer to like 138 or so. We shall see, but it's definitely a stock worth keeping on the radar, in my opinion. But besides that, let's jump right into today's momentum plays. With the first one, we have C3AI, ticker symbol AI, and it is to the upside with a breakout level of $16.50. With the next one, we have Floor & Decor, ticker symbol FND, also to the upside. It had a pretty good day today of around a 6.3% gain with a breakout level of $90.50. And then with the last one, we have Netflix, ticker symbol NFLX, but to the downside. And this one has a breakdown level of $1,192. These three stocks are on the radar for potential continuations tomorrow, if and only if they break through the levels listed. Setups come and go. Prioritize making smart, long-term oriented, disciplined trading decisions above all else. No matter what you do, if a setup loses, that's okay. Focus on keeping the loss as small as possible because it is inevitable to lose trades sometimes. It's how you manage them that matters. You can learn about making long-term oriented, smart trading decisions for free in the Key Lessons channel of the StockedUp Discord, so definitely check that out. And besides that, let's not waste any time and jump right into today's very interesting and exciting $936,000 big money trade. Today we are looking at ticker symbol UPS. I'm sure everyone knows UPS. Today the trader here bought the 80 strike call options that expire on November 21st of 2025. This is, a fair sized trade coming in at just under $1 million. These call options are already in the money, and these options have a fair amount of time to them. Nothing that is, overwhelming, like out to, let's say, April of next year. But at the same time, it's not an option that expires in 2 weeks from now. It's like kind of like that sweet middle ground where the trader here is positioning themselves to profit off of an extended move over the coming weeks and months, and they're also buying relatively high quality options as these 80 strike calls are already in the money. UPS is down nearly 60% from its all-time high back in November of 2022, and especially over the past few months, the stock has been getting weaker and weaker. We can see that it was especially weak today at open, but buyers came in strong ever since the market opened, which is definitely a good sign. Looking at UPS right here, I really do like the risk reward, where we can see right now it's trading for just under $85, where if we look at it in a risk reward sense, I can certainly see it as a justifiable trade, where if a stop loss was set, close to, we could say like the $81.30 mark, with profit targets, as soon as, let's say, 92, or you could push it even further, closer to like 97, 98. That is, where, it gets more customizable, but we could see it offers like a nice risk reward right now. If a stop loss was placed around like $81.30 with a profit target closer to 98, that would give a risk reward of around 3.8, which is certainly nice. But again, if you don't want to push it as much, you can certainly, tame that down quite a bit on the profit target side as well as the stop loss side. But either way, it's a very interesting trade. It's nearly $1 million. The options have time to them, and they are relatively high quality given the strike price. So I think it's definitely an interesting stock, especially considering how overextended the stock is to the downside, as well as the general euphoria we are seeing in the market right now. So definitely check it out. And if you're new to the channel, definitely make sure to consider obliterating that subscribe button. Every single day, we cover the most important news, information, chart setups, key things to pay attention to, big money trades, and basically everything you need to know about the stock market every single day. If you subscribe, you'll get our videos recommended to you more often. And then before we do anything else, let's give a giant shout out to today's member of the day, 3 seashells in the stocked up trading floor, who made a little bit over $1,700, and they said 42 minutes. So huge shout out to you, 3 seashells. Keep up the great work going forward. And it was nice to see those gains with TEM, which was actually high risk breakouts, call out today. That actually ended up popping by 666%. We had some circle call options pop up by 373%, open call options by 343%, LRCX call options by 336%. The list goes on and on. There was one dud in there as well, ticker symbol BMNR. But if you're into short-term trading, definitely check out that first link in the description and the comments down below. You'll get full access to our army of custom trading bots. You get full access to the big money trades that are posted every single day, but before this video posts, so you can oftentimes get better entry opportunities, as well as just see which big money plays are actively performing the most every single day. You could also use custom commands at any time of day to see if the trader is still holding, among many other things. You can access our weekly live events, chat with Tom and myself all day long, and so much more. You can save quite a bit with coupon code BIGMONEY that is in the description and comments down below. So definitely check that out. But again, like we said, the market is at a pretty good spot right now. We're at all-time highs. There aren't any key economic events for tomorrow, so it should be a great day. Thank you all so much for watching, and let's end the week with a bang.